Ms. Templeton, how would you define value investing in today's world of abundance? Everything is available in plenty. Liquidity, cryptomania, even for that matter, retail participation.
Yes, lots of abundance in the market. Well, value investing is inherently disciplined. So that's number one. And anytime there's as much monetary and fiscal stimulus as we have seen, you're going to see that money be transferred over into riskier assets, especially with low interest rates. So I think it's critical for a value investor to adhere to their discipline. That doesn't always mean selecting low PE stocks. It could mean focusing on free cash flow yield. There's always some metric that's working well in the markets. And it's also important to remember that this rebound from the pandemic has not been an even rebound. There's a lot of unevenness in the market, whether that's the US markets or markets in India. Not all stocks have participated in this run-up. So we are still finding some attractive values around the world, including in India, in the stocks that haven't participated in the market run-up, to speak.
Look at the week we had earlier, 3.5% down for the markets. India was underperforming the rest of the world as well. So with everybody watching out for the FOMC meet, will it be just 4 rate hikes in the rest of 2022, etc. Sandeep, let's begin with what you're making of the market. It doesn't even look like there's 6 trading sessions left for Union Budget.
I think, it's a very interesting 2022, the way we look at, because I expect the volatility of 2022 will be much higher as compared to what happened in second half of 2020 and entire 2021. Okay, with this background, what is very interesting to note that, despite market has corrected, like in India and emerging market has also corrected. But if you notice that the emerging market currencies has been very, very stable. Okay? Whether you look at the Asian dollar index or you look at the MSCI emerging basket as a whole, that gives me good amount of comfort, okay? Because we believe that currency market gives you much early indication, and currency market gives you, they are more sensitive, they give you much better perspective than the equity market, okay? So to be very candid with you, when we met, I think last time in December around 20, we talked about bottom is getting in place and we saw a big rally. Okay, and now obviously closer to 18,300 or 400 mark, good amount of complacency was there. So we have seen a good amount of correction. Okay, but if you ask me that something one should be very worried about emerging market, should be worried about India in particularly, I don't think so. The problem area is US, which I have been highlighting for a while. The US is where the vulnerability for global equities or vulnerability for growth stock is the maximum. And that is the way we believe, unless US market bottoms out, India will also not bottom out. So in terms of, if I have to look at the volatility cycle or the VIX cycle in the US, it's close to 29 or 30 mark now. I believe that it has potential to go back to 36, 37% mark, okay, before US market bottoms out. And that can happen maybe close to Fed event or maybe one day later to that event, because post that event, volatility has to come down, and which we can bring back some amount of calm to the global equity. So I think it's a question of another 3 or 4 trading sessions where global market should rally. But one has to learn with the art of making this, I always talk about volatility as the invisible animal as your best friend, because you have to live with this volatility in 2022. So whenever you have extraordinary fear, which is the case right now, this is a time to rebuild your exposure in the equities. And when you get into complacency, which was the case maybe a week back, that's a time to prune it down. That's the way this whole 2022 will be played out.
Insurance is on the cusp of a transformation with the LIC IPO upcoming, economic growth, increased affordability, and of course, at large awareness as well. The metrics put together signaling the environment right now. Share with us what your outlook is for the entire financial year.
I'm very optimistic. I've gone from being cautiously optimistic to optimistic. I do believe that the viral strain and the wave 3 we've probably peaked in several parts of India. which means that demand and all the macro indicators are still very robust. I do feel optimistic, like I said, as we go into the next financial year. It's no longer in people's mind as to why do I need insurance, and that used to be the case not that long ago. Do I really need to spend this money into insurance, or can I do something else with it? Nothing's going to happen to me, and so on. So I think now it's no longer the why of insurance, but the what of insurance. Which product is suitable to me? Who should I cover in my family? And so those conversations are changing and have already started. So that's something that makes me very optimistic. Also, as we move more interior, away from metros, like I said, there is untapped demand. So there's a lot going on. And also Credit Life, wherein we do partner with banks, NBFCs, small finance banks. As credit offtake continues to be robust, we will also piggyback on that demand to be able to cover the loans with insurance. So it's really multi-pronged. And final part is on annuity. There too, a lot of people who are close to retirement or thinking about retirement are beginning to understand that they will easily outlive their retirement age by maybe 20 years, if not more. And with inflation continuing to be there, they are soon going to have serious erosion on their savings. So how can they lock in into annuities is also something that people are beginning to understand. Our entire retirement focused campaigns is also enlightening people. So it is really multi-pronged in terms of opportunities for the life insurance sector.
What can you tell me about pricing going forward? What's the visibility that you have?
As far as the prices are concerned, globally it got corrected by more than $100 in the last quarter. But what we have seen in this quarter, after a huge amount of volatility in the input prices, coking coal prices went down as low as $310 per ton. Again, it went up over $400 in the last few days. So once coking coal prices started moving up, and number two, the restocking which has happened, destocking in the last quarter, now people started coming to the market and buying. So these two together, we are seeing there is no downside to steel prices from here on. The cost push will keep the prices stable or having a upward bias. That is the kind of scenario which we are seeing with regard to prices.